Thank you, everyone, for joining us today. Last year on this stage, I interviewed Robert Downey Jr. And Tony Fadell, who made the iPhone. So no Iron Man this year, but Capital Man and Wonder Woman, as far as I'm concerned. Albert, you are a partner at Union Square Ventures and author of World After Capital. We'll be hearing a bit more about that in a second. Ella is the co-founder of Zinc. Lots of you based in the UK will know Ella. Redirecting people's careers to mission-driven entrepreneurship to tackle major social problems. A couple of things to kind of set the scene and context for what we'll be discussing today from me, and then predominantly we'll be hearing from Ella and Albert. So our panel today is how can we nurture more conscientious and conscious investing by VCs to solve urgent crises? And when we think about urgent crises to do with the planet, it's sort of climate tech and such like. I think the thing that I'd really like to kick off with is thinking about the disconnect between the chat and the action, because it's very cool to talk about climate tech. It's very cool to talk about impact and mental health. It's not only cool, but it's right. But I read an article last week in advance of coming here, which I wrote down a couple of statistics to frame our conversation that blew my mind. I read that last year, $630 billion was invested worldwide in climate tech and planet-enhancing technology, from a reliable source, I would add. Of that, $9 billion was directed to agri and food tech in Europe, of which 4.2 billion, which is nearly half, went to e-grocery. So that's those people that you text on your phone when you're a bit peckish at 7 p.m. on a Sunday and you can't be bothered and you quite fancy an overpriced strange drink that you wouldn't ordinarily have in your fridge. Or that's an insight into my life choices occasionally. So 73% of all e-grocery, so 73% of that money went to three people: Gorilla, Flink, and Picnic in the Netherlands. So, and that's one more statistic, 32% of all European VC. So I guess a lot of statistics, but really the question, and that we can start with perhaps, is we've got the money and there's lots of funding. Are we sending it to the wrong people? And maybe, Albert, I can start with you in that regard.
Well, overall, we've had this sort of really long cycle of people putting money into software, right? Because people found that software businesses had very high margins. Some of them had very powerful network effects. And it turned out that returns were incredibly good for a very long period of time. And when returns are good, more and more money piles in. And I think we've reached a stage today where, you know, in any area of software that you can look at, including, by the way, climate software, you have dozens of startups, very well-funded startups. Then you go look into other areas of climate, for example, such as new power sources, such as ways of adapting to the climate crisis, like better measurement of flooding and so forth. And all of a sudden, it's a much smaller funnel. So I think we're going to hopefully get a much bigger rotation of capital away from software as public market valuations in software contract into these new areas. And I think we're just at the beginning of that rotation.
Thank you. And Ella, a quick thought from you on that to kick this off.
Maybe I'll talk about the side of the talent, I guess, to kind of counter that. So I think there were a lot of software companies which were founded by similar people, had similar backgrounds and the insight into the industry, and then usually when those companies did really well, those kind of second tier, or first hires then started their own companies. So there was a bit of this kind of bubble in terms of the talent. And I think what we're also seeing now is this more diverse talent that is coming to start companies and they get funding. And so when you have more diverse talent, and I'm talking anywhere, we talked about women who understand women health issues, for example, or people that come from diverse backgrounds, and they are more likely to then develop solutions that will be going beyond, your very quick, what is the latest advertising? Get the gin to do your gin and tonic on a Friday night. So I think if you kind of merit on one hand the investment, but on the other side also different talent will be kind of driving different kind of solutions and innovation to different problems. And I think we are at that point where those two things start to converge, and this talent can show great return on investment by tackling things that are less obvious or that were less obvious before.
Yeah, I mean, that resonates. I guess I've got a question for you, Albert. I mean, when I originally used to think about impact investing, I used to be a banker. I run a SaaS enterprise software company. Impact to me is capital impact. It's, it's returning people's money, it's being successful with what you do, it's running a good business, and that's not really what impact investing is right now. So for a Union Square Ventures, for example, where you're not an impact investment fund in the context that we're talking about it today, how do you ensure that as a business you contribute to the much needed resourcing and financing of the kind of companies we're talking about when it's not, as I understand it, your mandate?
Well, I think the mandate, obviously, of a venture capital firm that's not an impact investor is to produce returns. But I think there's a foundational question in venture capital: who is your supplier and who's your customer? So many firms think that their customers are the LPs. We tend to think that our customers are the entrepreneurs and the LPs are the suppliers of capital, right? And so you obviously need to produce a certain level of return to continue having suppliers of capital. Just like, let's say you run a restaurant, you need to pay for your eggs and for your meat a certain market rate to have suppliers of eggs and meat. But where the value creation happens is through the entrepreneurs. And so as a firm, I think we've done a very good job kind of seeing where is the next wave of entrepreneurship happening. And so once we saw that there was interesting entrepreneurship happening around female health, we backed Ida Tin and the team at Clue. We backed Nurix. We backed Modern Fertility. These were all female entrepreneurs starting companies aimed at female health. That's been a very fruitful vein for us. Then we saw things happening in climate. And so the way we look at this is that impact and financial return don't necessarily need to be kind of at odds. This narrative like, oh, you can do one or the other. But I think if you look for areas that have a lot of potential, many of those areas happen to be areas that have profound impact.
And that, I think that's a really good segue to asking you a question, Ella. I mean, when I think about some of the missions that you've had at Zinc, speaking personally, there are lots of things that have resonated with me. But recently you had aging, which is something, as an angel investor, I very rarely see anything that's kind of dedicated to my, do you want to swap? No. To my grandma Rose, who's 97 and can do with lots of the things that your entrepreneurs are thinking about. Children's mental health as well. Yep. I saw a few things, how children cope with death, things that lots of people just don't really talk about, but there's an enormous market for. They're wonderful. They really resonate with me. I'm sure they resonate with other people. Was it challenging for you to find funding in your fund? And did you, I'm really curious, are your investors predominantly people who invest in impact? Are they people who are touched by children's mental health? Or are these pure, unadulterated capitalists?
So I think we're very lucky to have LPs that are either very commercially driven, but I guess the same like Albert sees the opportunity and the commercial upside by investing in us to be investing in those kind of areas, because those areas, those unmet needs, as you say, are representing huge market opportunities, right? They're untapped, they're unmet needs. Also, even if you think within some of those areas, there is innovation that is designed to service some affluent users. But if you start thinking, okay, how do we redesign those services to apply to kind of the lower income or middle class, to be honest, which is a mass market opportunity, which is not necessarily done. There's another level of innovation and commercialization to be done there. So I think on one hand, we have LPs to see that kind of approach and think actually it's really smart because you're going to get really interesting people who will build really interesting stuff, and there is a commercial opportunity to tap into. And then we have the ones that are more socially kind of driven, more societally driven, and their mandate is foundations, or say they're an impact wholesale bank. Their mandate is to drive innovation in those areas, but they are expecting returns. So they're not doing it in a charitable way, and they look to us to also do that in a commercial way, because that is the way to actually catalyze change and make those companies become big brands and global. And we really believe in that thesis, that if you don't create them with that kind of equal ambition, and to Albert's point, I don't think it contradicts, moreover, my thesis, and I bet my career on that is that actually that enhances each other. So it's easier to build a brand. You stand out because there's not as much competition. It's easier to build, to bring kind of talent in, et cetera, et cetera. So I think the kind of more impact investors see the commercial approach as the way to scale those kind of innovation and solutions.
There's a very important thing happening at the moment where there's a lot of money flowing into ESG funds. And I personally think that this is very problematic because the sort of ESG criteria seem very loose. You have oil companies that are approved for ESG, and then you have Tesla, which is not approved for ESG. It seems weird.
That's a very diplomatic way of describing that, Albert.
Yeah. And then the other thing I would say is, impact is also very hard to understand in advance. I remember very well when we invested in Twitter. We were the first investors in Twitter, and when that investment was announced, people were like, oh my God, you're so stupid. Who wants to hear what somebody had for lunch? And then 10 years later, it was like, how could you have funded them? They're destroying democracy, right? I mean, it's very hard to predict exactly where technology is going to go. Like in the climate fund, for example, we've backed 2 nuclear companies. And there's a lot of people in climate who are like, why are you doing this? We should just be doing, more solar and more wind. And it's entirely possible that that future may work. It's also possible that we find ourselves in a place where we're like, no, we actually need a lot more nuclear. And so then, of course, you can't go back 10 years and say, oh, we should have invested in innovation 10 years ago, right? I mean, if you look at the COVID crisis, we were safe because some people have been working on mRNA vaccines for years prior to this happening. So I would say impact, and there were lots of people who were writing off mRNA vaccines. They were like, they'll never have an impact, they'll never matter. In fact, the key researcher couldn't get her funding renewed at UPenn. She was at UPenn. She had to go to Germany to get to be funded there. So my point is, I think people seem to believe somehow that impact is this thing that you just, magically, it's in the air. And no, it's like really hard to understand, and you got to keep working at it. And some things start out being really good and then maybe turn out to not be so good, and some other things start out being maybe problematic and wind up being very good. And it's not a one-off thing, it's a process.
Yeah, and a couple of things. We all have been on a journey, and different things resonate with different people, as you said. Nuclear, some people like it, some people don't. For me, a couple of things come to mind, which is the VC model of return. Myself, lots of people in the audience, Ella, we've all gone to raise money in the past, or trying to, or will do again. Does the VC mentality work in this regard? Because you mentioned a few things. You mentioned my friend Ida was using Clue for years before that got money. Olio, which some people here will use for food waste. I mean, I was using it for years before anybody really wanted to kind of actually fund. Obviously, now they've done a very successful Series B and are doing spectacular things. How do you get the attention of people who have a model for returns that's pretty aggressive to invest in things which we know may take time? It's very, very hard to be that charismatic and get people into something so early when it's not that revenue inducing. I'd love to hear both sides of the table, because I know, Ellie, you're at the beginning of that chain, and that's really important.
Yeah, exactly. And I think it's like you look at any category, and you had the same way you have like early adopters, you have the same way, I think, with VCs who are willing to take the risk and invest in something that is not yet proven, and then, sorry for saying for the VCs who are listening or sitting next to me, but I think VC behaves in a pattern way. So something works and then everyone kind of copies, but you need a few people to then prove the point. And I think once you see enough companies, so you now have enough companies to look at in terms of success, in terms of women's health. So you have Clue, and you have LV, and you have Maven, and you have a few examples to point to and say, actually, it's working, and they can, at least in a directional way, show potential return.
But those haven't had traditional funding, right? I mean, we know you're in Clue. We know that obviously LV.
But that, as you say, it took a long time.
It took a long time.
But now that you have more of that, they basically paved the way for the next generation of kind of women's health companies. And femtech was not even a term like 4 or 5 years ago, right? So
Ida created it.
Yeah, exactly. But now people are using it, and they identify as a category which didn't exist. So I just think it's the same. I think it's in everything that is innovative and it's groundbreaking and it's new category, you'll see kind of the innovation coming, and you'll have to see proof points, and you'll have to see success for that to be kind of inspiring talent.
But we know
as well
that's
as
going to
investors.
resonate with you. How does it resonate? Because it's early stage, but then you call up a large venture firm on the East Coast, and it's like, how do you really present something that's a bit nuanced with like a unusual nuclear nuclear technology. It's tricky.
Well, we're not a large firm. Our funds are in the $200 million range per fund. And so I would say, I think, what Ella just said really resonated with me. When we invested in Coinbase had come out of YC. Nobody wanted to invest in Coinbase. When we invested in Carta had failed to raise money on the West Coast. It is about developing conviction on things where other people don't have conviction yet. That's where the big returns come from. They don't come from investing in what everybody else is investing in.
I love that. I didn't know that about Carter either, and I love Carter, and I love the Carter story. I guess one of the things that we're also here today to talk about, which we can't solve, but we can maybe just sort of evolve, is how to make sure VCs are in this space. And I, speaking personally, I'm not an impact investor with my angel. I'm very much on individuals. And as a business, we're enterprise tech. That's, I can't say really that we're saving anything to do with the planet, although obviously what we do is very important. But so I think the question becomes, how do you get people more invested in impact? For me, it's quite a personal thing. It's things I do outside of work where I try and really make an impact with my family or with other initiatives. I mean, is broad VC impact investment possible? Should we be directing people to angel investing more? How can we get this on a more mainstream agenda? Because, what you do, Ella, is very much the beginning of the journey.
So I think there are a few levels, right? So first, from an angel perspective, I think it's important that the angel community is very active, because to the point that they can't get to the point that they can raise VC rounds unless they had some capital to begin with and experiment and show some traction. So I think the angel community plays a huge role. I think the UK, we're very fortunate with the schemes we have to enable people to do that and unlocking a lot of capital in that way. I think getting access to that is hard if you're from the right network, it's easier. If you're not, it's harder. And there are different networks. Alma Angels, one which I co-founded, is an example of angels investing just in female founders, but there are other ways to do that. So I think it's as a community and an ecosystem, you have to lower the barrier at the very beginning. So start with that. I think that's, if you can't get that right, then you don't have a good pipeline. And other people that are enabling those entrepreneurs, more diverse entrepreneurs, to build those kind of companies, to take that risk. And I think people are, generally speaking, are willing to take more risk for things they really care about. So I think an entrepreneur will go the extra mile and will work harder and will have much more grit and resilience if they solve something they really care about. And most
is that fair? Because most of the founders I know who are not doing something to solve planet problems are wildly ambitious and super caring and very, very focused on what they're doing.
I agree, but I would say that I think those that are doing it also from a kind of personal conviction and emotional kind of ambition, they will have even more grit. They will go through even more hardship, and you'll also see different kind of entrepreneurs who are willing to do that, because they will take the risk that otherwise they wouldn't. They wouldn't do it for just a return on investment and the risk that is associated and the lack of knowledge, etc. So they'll put themselves at risk for something they really care about. So that's, I think, from a talent perspective. And then from a capital perspective, I think, again, you need that diversity of experience, of thought, of background in the decision-making points, because eventually there are a few VCs who will take the risk on trying things that are different and new, and I think that's where you build a category. But they are basically the gatekeepers to decide which problems are going to be tackled, and we need the right people to make those decisions. So we need more diversity, like Newton program as an example.
Diverse, it's a whole other subject, right? Diversity
but it's not just of gender, it's just of opinions and approaches to trying to take risks and be willing to take risks for things that may not necessarily seem to be, market kind of average decisions. So I think that both sides will are important.
And it's always, at the end of the day, entrepreneurship and talent leading and capital following, right? I mean, that's always the story. I'm German originally. I grew up in Germany, and when I grew up there was basically no entrepreneurial ecosystem, and no Silicon Valley fund would have gone to Berlin to make investments. And today there is a thriving ecosystem, but these things take time. That's a multi-decadal build. And I think the same is going to be true for many of these other topics. So I do think we're seeing more female investors. My partner, Rebecca Caden, has been very active in All Race. She and our 3 female analysts were just at the All Race event. It was huge, compared to prior years. And so this stuff is happening, but it does take a lot of time. A VC fund cycle is 10 years. we as a firm have added a new partner roughly every 3 to 4 years in the history of the firm. And so this kind of change, unfortunately, I mean, I wish there was some, easy, fast button you could hit. This kind of change does take time, and you need to be persistent, and you need to hold people accountable over long periods of time for it to ultimately happen.
Just adding to that, I think the other side of it is how do you create new type of venture funds that are designed from the outset, so they don't need to evolve, but they're...
And the word venture fit in that? I mean, is venture the right or the wrong word, perhaps? Because do we potentially associate VC with a particular type of return or a particular type of investor or mandate? I mean, this panel is not does VC work, it's how can we get more VC money into solving very large societal problems. But do we think it works?
I mean...
And by the way, if I may say, Ella, we're going to take some questions in a minute, so do have a quick think about your questions, because we'll be opening up to the audience imminently.
So I'll keep it short. I think there are two things. One, I think I still believe in the venture model. I've just raised a fund, and I'm betting that will provide good return to my LPs. But I think that's the thing, is like, I think LPs are, if they are the supply of money, they also need to be looking at backing funds that their thesis is more about those kind of taking bold decisions, allowing for their managers to prove the point and provide that kind of ability to take risks, I would say. So I think LPs, and we're seeing more of those, and you can start seeing very specialized funds that are doing things around climate or social kind of equality and things like that. So, yeah.
My wife, Susan Danziger, has done a huge amount of work around not just female entrepreneurs, but also minority entrepreneurs and minority GPs. And so, going back, I would say 6, 7, 8 years, we started investing our money as LPs with firms like 654 Ventures, Female Founders Fund, and so forth, because yes, one way to get there faster is new firms. Absolutely. Yeah. And so, we've put our own money there to help catalyze that. And I would add maybe one more thing, which is on your question of venture. I think you have to ask the question even more broadly, which is, I think that starting in roughly the 1970s, we've developed an ever more narrow model of what fiduciary responsibility means, right? And we've taken it from a very broad concept to this hyper narrow concept. And I think there's a beautiful movement afoot now to sort of say, no, wait a second. For example, when we went to our LPs for the climate fund, we sort of said, look, your pension funds, your university endowments, your time horizons ought to be 20, 30, 50 years. If the climate crisis isn't on your time horizon, you're not being a good fiduciary, right? This is not a question of like next year's returns. This is a question of long-term stewardship. And I believe we're seeing lots more experimentation. There's a group in Germany called Purpose. They're helping companies transition to a steward ownership model, very different return profile. There's a lot of German companies, for instance, in the organic food business that are doing a generational transition, and they're helping those companies go from, being owned by the founder to being steward owned, which basically means kind of a separation of the ownership from the long-term governance. And so there's many interesting models, and we've kind of developed a monoculture of models, and we need to get back from this monoculture to letting many different types of enterprise succeed.
And I think it's a good time to do that, given the way the capital markets work. So I think we'll see that innovation going back to shocks. I think there is a bit of a shock in the system now. Maybe a small one, but still a shock. And I think we'll see entrepreneurs going for other ways of funding, because there's kind of now a bit of everyone's freezing, not knowing, not wanting to take risks. And I think the entrepreneurs will go and find those alternative sources of funding.
100%, right? It's not just VCs are obviously phenomenal. It's not just VC, right? With obviously, and you, Albert, are obviously the best. I guess so. I wanted to leave a good 10-ish minutes. So actually, I've got one more question, but it's slightly more philosophical and a bit UK-centric. But maybe you can apply what you do to it, and Ella will be familiar. In the UK, we have EIS, which is a type of, it's a test. It's a way for an individual to invest and to offset some of their corporation tax, their annual tax bill against that investment. And it has really, I mean, speaking personally, it's transformed early stage investment for me as an angel, but also in the earlier days of my business. It meant that individuals could write reasonably sizable checks. It was potentially, hopefully exciting as a business, but also exciting for their tax status. And I hear you talk about ESGs, and we talk about just sort of thinking about more long term and all of these problems that we need to solve. And I'm like, do we think whether it, not just domestically, but perhaps globally, you have all these ESG funds, all these, you mentioned oil companies with all these pots of cash, we'll call it. Presumably there are loads of impact startups who would love to get hold of some of that money. So perhaps there's a case for some sort of federal, wherever it is, domestic federal tax breaks for companies that invest in impact driven technologies and entrepreneurs. Because I'm trying to think, I'm sitting here and I'm thinking, how do we get the really big companies who, let's face it, we love them as customers, but they take a little bit longer to get there. Perhaps funds that may take a little bit longer to back because we're going to take a little bit longer to get profitable or to start to show traction. Do you think there's a place for some sort of federal tax policy on this? Loaded question, because I'm suddenly thinking maybe that's a way to help. Quick light question before questions.
I think there are two levels. One is on a kind of what the government can do in order to kind of accelerate that behavior and that kind of capital flow from big pockets to innovation. And I think, so the UK is doing also stuff around UKRI and Innovate. And so there are different schemes that are trying to help with that kind of grant funding at the early stage to drive that innovation, because I think also sometimes investors don't want to take that much of a risk at the beginning. So de-risking that through grant funding, I think that's one way. I definitely think that you're right, but probably there is a smart way to unlock government in providing that kind of incentive for corporates to be investing in, maybe not directly in companies, but
that
through
oil
some
company
kind of
that Albert has in mind. Maybe we can help them to spend their $250 million by saying there'll be a tax break, but we can help them direct it to companies that might otherwise not reach it. I think
it's maybe a beginning of an idea.
I'm not a huge fan of, tax is a very blunt instrument at the end of the day. I would love to see government step up more on, for instance, really leaning into what it means to address the climate crisis, right? So, governments pay lip service to the Paris Accord obligations. They come to COP every year and sort of say this and that, and it all sounds very good. But if you look at it, it's all like backloaded. And I don't think we're going to get there on a backloaded schedule. So there's a lot that governments could do to lean into that. There are other areas we talked earlier before this, for instance, research funding into female health. It's still the case that a lot of drug trials and a lot of basic research is, done on male models and male. So I think there's areas where government, like when you go really early into the research, where government funding makes a big difference. So I think there are more subtle instruments. The tax code in the U.S. is a mess. It's a mess where wealthy people, like myself included, pay less taxes than the average person, and that's not a good thing, for sure.
Right, we don't have an answer, but maybe we have a seed of something or other. Right, I tried to have a solution, but we had a good conversation. We've got 10, 15 minutes. I'm not sure how questions work, presumably old-fashioned way of sticking hands in the air. I wasn't sure whether we'd have people going off with red colours on their green headsets or something a bit more complicated. The first person I saw was a gentleman 4 rows back.
I think the ones with the red are here, but actually listening to the other track. They're
exactly.
Not as cool as the one before.
They're the ones we need to shame, because they're not paying enough attention to this. Hi, tell us what your name is.
Hey there, Eddie, data scientist. But thinking about the way Berlin's scene has evolved and how remote work has changed how people work nowadays, do you think there is a space for VCs to be less focused on particular startup sections and investing in companies more diverse across the world and the countries?
As in just
outside of big cities? So
I suppose the question is maybe for both for Albert and for Ella, whether they're putting money into places and whether geography makes a difference, I guess.
I think you'll have a better answer because I remember we had this chat before a few years ago about your hands-on support and the importance of that. For us, we want people to come to London, so we're able to kind of endorse for innovator visa. I think the physical location of London is important for what we're doing because I think our model is relying on people coming before they have a business or a team, so they come to find a co-founder and to start the business, and we work quite closely with them in that process of the 6 months. And I know there are some platforms that allow for meeting, speed dating co-founders. In my view, our model is relying on people really being together and building that trust over those 6 months and us having conviction in them as a team over those 6 months. So we do a really good due diligence before we make the decision. This is my pitch now to my LP saying, I had 6 months of seeing them day in and day out. I can really, I have conviction in them as a team. So for me, the physical thing is important given what we're doing and our specific model and then our value add as well. I think London is, again, from an ecosystem perspective, is really unique because we have access to research and governments and investors and creative industries and NGOs and access to users. So it's a very, very specific ecosystem that I think is really important for the early stage of the kind of companies that we build. So I'm doubling down on that. I'm happy to bring the world to London. So if you're interested, let me know. But we can help you come to London, at least incubate here, and then you go wherever the market is right for you. So that will be my...
Albert?
And we've been working on bringing USV to the world. So COVID was a great accelerant in a way because we started to invest in teams that we had only met over Zoom. And if you're going to Zoom, it doesn't really matter how far you Zoom, as it turns out. So we've made our first ever investment in Australia. We've made our first ever investment in India. We've made our first ever investment in Egypt, so in Africa. It's too soon to tell how these are going to turn out. We've partnered up with local VCs. Very excited to say we hosted our first portfolio summit since COVID about 4 weeks ago, and people came in from all over the world. Our approach is to try and build networks of companies that we've invested in. And now, for example, we have a critical mass of climate companies. There's 17 in the climate fund. And so there's now a network of, and they can discuss topics like carbon credits and regulation and non-dilutive funding, et cetera. So this has been a really interesting time period for us, and it's an experiment, but one that we're very excited about.
Yeah, and I mean, networks, interests, commonalities can be technologized. It's my day job. We power alumni networks. People are everywhere, and COVID was indeed an accelerator. Although, I'm
should
told
power the USV alumni network. We should talk about that.
Well, there we are. Right, sale done. Glad that I came.
Closed right here.
Yeah, but I guess I was going to say the flip side is some of my team tell me I'm old-fashioned because I like to meet people in person. I'm back on planes, so I think there's always a hybrid of both, and it sounds like your conference was that. Another question. Lady at the front. There we are. Just so mainly so everyone else can hear you.
Can scream, but everyone is wearing their headsets. They're not going to hear you.
Hi, thank you so much for the talk.
What's your name?
Samiksha. My question is around within the funds that you run and the teams that you run, what are some top-down subsectors and theses that you are very excited about, especially keeping in mind impact, and also going one step further to talk about business models that you're excited about. All of us know SaaS is a very interesting business model, the most stable one that there is, but thinking about impact, subsectors and business models that could be exciting.
Okay, we're going to kind of speed answer so we get to have 3 more questions. I mean, obviously I'm enterprise SaaS for life, but on to you.
Well, we have a dedicated climate fund. Its thesis is around climate mitigation and adaptation, and then we form specific sub-ideas below that. To just give one example, an obvious one is electrification of transportation. India is adding 25 million net new vehicles a year. You're going to have to let that sink in. It's 25 million new vehicles. Now, a lot of those are two-wheelers. Still, they're internal combustion engine two-wheelers.
I can't take that in.
Yes. And so we invested in the now fastest growing charging network in India. So we developed specific sub-ideas under this larger thesis of
There's a good video or blog post that you've, I think.
Yes, our team's been putting out great posts. If you want to know what we're investing in, just go to usv.com. We're very vocal about what we're looking for.
Ella?
I think, we operate on a mission basis, so every program we run has a specific mission. So we've just completed the one on children's mental health. So we have a few, 15 companies that are now out in the world. They're kind of a month old, starting to innovate and experiment. The next one is on the environment. We've taken a B2B approach, so industries. How can we help transform industries? So supply chain, manufacturing, transportation, food, farming, etc. So these are kind of the two that we're kind of just completed, and our line of sight is doing another one on aging and another one on the kind of future of work as well, and cost of living and things around that. So I think we're always going to keep doing things around those things, just different kind of lenses or maybe sharpness around the specific issue we're trying to solve.
I hope if you're raising that you heard something you liked in that. I'm going to go to a question right at the back and then we'll come back to the front so that I'm not utterly biased by people I can directly see. Gentleman about 7 or 8 rows back. Don't forget to tell us who you are.
Hi, my name is Theo. And I had a question more about when you're VC, you have amazing power to push startups to take some problem in account when they grow. One of them is climate change, as everyone knows. And as we have the classic pitch deck where we have the 10 information every VC wants to see, shouldn't we have one slide which is about how this startup plans on handling the climate change, either helping it or how they took it into account on the futures? Because any company being created now is going to have to face huge issues linked to climate change or any impact in the world.
Sorry, just to make sure, is your question, should this be a consideration for an investment?
Should people have a pitch deck, in that standard 10 slides that we all do when we're pitching, should we actually have one that says how we impact the planet or something around that? I mean, sounds like a great idea to stand out, even if you don't, but what's your view, Ella?
It's a great idea. I think it will make you kind of stand out. I think some of the challenge that I see in the stage that we're operating in, it's like usually 2 people with an idea. So I think your ability to predict like what it is that you're going to exactly do is probably harder, and I imagine top of mind for you at that moment is just how do you solve the problem you're trying to solve with the business. I think probably I would say later stage, and I know some VCs are actually putting these in their term sheet around diversity and some ESG metrics. I think that's the point, because that's where the capital is starting to scale, and that's when it matters, and also you can assess what they've done so far in terms of
it's where maybe you have more than 5 seconds, when you've got 100 grand and you've just started and you don't exactly know what it's going to do. It's probably a lot to ask a founder to even think about that, but it's a beautiful thing to keep it in mind. Albert, do you have a view on that?
I think that we need carbon pricing, and I think if we get carbon pricing, it'll take care of it. And I think that it's a systemic problem that needs a systemic solution. And even if VC firms sort of start to say, well, what's your carbon impact for individual startups? I just think the reality is it's only going to get taken seriously once we have the right kind of regulation in place.
Yeah, sadly, I'd have to agree. Regulation, which I don't naturally warm to, sometimes does help solve problems and create infrastructure. We've got time for 2 more questions. I'm going to take one on the right side because I've only taken on the left side. And then if we have time, we'll come to you, sir. That gentleman there, yes. Quick questions and quick fire answers, and we'll see how many we can get through before I get told off and we have to put the microphones down.
Can you hear me?
We can.
Hi, I'm afraid there won't be anything quick about my question, but it's really the realm of the metaverse.
You're going to have to speak a bit louder, I think, probably.
Sorry.
And your name first, maybe.
My name is Rafa, and I'm representing a law firm. But my question is not representing a law firm. My question is about the metaverse and the VC community and the interest in metaverse. And I will get down to the question in a second, but I feel a little bit intoxicated by the idea of metaverse, having spent last 2 days here at CogX. Just your views as a VC community in terms of, are you interested in that space in terms of investments? And what would you consider as interesting? I mean, it's quite sort of
That was a quick question. Are you interested in the metaverse? Ella?
Thank you.
So going back to our thesis, we start with the entrepreneurs. So I think if again, for me, the meta is a platform. It's not a solution. So I would be interested in the problem you're trying to solve, and is the metaverse the best solution for that, and can that exist there and have the impact you want? So I care about the problem and whether it's the right thing to do that. So I would say, I imagine yes, but I haven't seen that yet.
I think there's a lot of innovation yet to be built in social digital spaces. We have, unfortunately, very few of them, and they're very poor in their sort of overall experience. So I think people have too many connotations when they use the word metaverse. I think it's really about facilitating human connection in richer ways, and there's a lot to be explored there.
Thank you. World's fastest question.
Hi, my name is Wodek. I'm a serial entrepreneur and also an investor. I have a question with regard...
We can hear you, so keep going, because you've got
I have a question with regard
seconds.
to impact investment and VC's investment horizon. Because when it comes to a lot of impact investments, they take a long time to come to market, often regulatory issues and other blocks. And so when they hit the wall of VC, the fund length and the investment horizon, then often VCs have no choice but to refuse because they won't be able to exit. Do you envisage that this will change the way VCs operate, or will it become more specialized? Or will it go more like the family office route where they have no constraints?
Okay. Ella, you've got -7 seconds to answer.
Giving you the answer.
Go for it.
I think you'll see probably some acceleration of innovation in some cases. So I think the regulation, for example, you can see the UK, if you take fintech, it was really, really hard at the beginning, and then you had kind of the regulator enabling faster innovation. I think we're starting to see that in health, not fast enough, but we'll see that. So I think that will be helping with acceleration of innovation in the early stage. Secondly, then see also hopefully some more grant funding into those companies to enable them to get further down the product development, so they can then hit that kind of innovation and well developed enough for them to de-risk that part and then start thinking about the risks of the market, which then VCs can get involved in. And I think we will see more modules of investment, which is not VC. VC is such a very specific investment thesis. The world is full of so many other ways to
debt,
fund.
and all we do is talk about equity. There
Debt
are so
and
many
revenue-based
yeah.
and grants and super angels. And so I think it's just, we'll see more of that, I hope, in coming years.
And a last word.
Perfect answer, nothing to add.
There we are. So that just leaves me to say a very big thank you to Albert, who came all the way from the US just to have this conversation with Ella and I, or we're telling ourselves that anyway. Ella, fantastic success. Congratulations on your recent raise. And thank everyone for joining us. Thank you.
Thank you.